Well, we all know the story. COVID crushed commercial real estate valuations, and questions still remain about regional banks' exposure to these properties. We heard just last month, though, that Blackstone thinks the worst is over for the global office market. Let's get another perspective on this sector with Chen. He manages the DoubleLine commercial real estate ETF. Also with us is Bloomberg's Katie Greifeld.
All right. Great to have you with us on set, Morris. And this ETF, I always bring this up when we talk, but this ETF launched on March 31st, 2023, in the wake of the SVB blow-up, which just delights me. And since then, the fund is up about 13.4% on a total return basis, obviously outperforming your benchmark there. From where you sit right now, where are you picking and choosing when it comes to the CRE landscape?
Yeah, I think there's so much opportunities in the CMBS market right now, and as it relates to commercial real estate. So, for us right now, in terms of investments, we do like the fund is very biased short duration. So, we do like very seasoned, commercial mortgage-backed bonds. Just given the nature of the underlying refinance pipeline, I think the refinancing picture has been improved in a meaningful manner. A lot of it has to do with just increased debt availability. Industrial still is a very sort of unique space if we're kind of thinking about property types, as well as retail and multifamily. I think these are things that, are, I would say, middle of the fairway for us as we think about, positivity in terms of fundamentals.
Right.
Office is also, unique as well. So.
Yeah, well, let's talk about office, because even still, when I talk to folks about commercial real estate, they talk about, commercial real estate ex office. It seems like to a lot of people, the office space is still scary. How are you approaching it?
Yeah, I think, we're not shying away from that space. I think there's, reasons to comprehend that the sentiment has improved. I think, just even walking around New York City today, looking at the Park Avenue corridor and Grand Central sort of a station area, you're seeing these buildings being, highly productive and used, right, in terms of utility. And so I think the sentiment from the office standpoint in itself, while there are, still issues underlying, certain Class B sort of older office property types, but I think the return to office sort of dynamics as well as the sentiment has really shifted for higher quality, newer vintage buildings, including this, right?
We are working in an environment where we're looking at extraordinary tight spreads, right? And this environment is not without its risks. You're just talking about one of them there. How difficult is it to pick up the debt of companies that you think are opportunities? And by the way, what happens if Fannie Mae comes out of conservatorship?
Yeah, so as we're kind of thinking about opportunities and tighter spreads, I think the benefit is on a relative value basis, commercial mortgage bonds still trade cheap relative to corporates. I think from an index perspective, corporate index is around 47 over. CMBS, you can pick up anywhere between 50 to 100 over for comparable ratings, right? So, think about opportunity-wise, for us, as we're kind of looking around the periphery, there are areas that are, often overlooked as investors are thinking about commercial real estate space. And I still think the benefit of having a smaller market relative to corporates, as well as, the investor base just, having to do more work and dig into these underlying collateral, you can pick and choose and you can find a lot of items. On the conservatorship side, I think that's to be determined. We'll see what happens and what comes of that. That's not in our front and center in terms of prioritization and concerns.
Well, you'll have to come back if and when that happens. Definitely the ripple effects there would be fantastic. Let's talk about data centers. When you and I last spoke in May, you made the point that data center CMBS issuance wasn't really a big part of the market. It feels like it has definitely picked up since then. Is that an opportunity for you? Data center is obviously so hot right now when you think about AI demand, but are you buying in?
We're on the sidelines at this juncture. This kind of goes back to your comment about tight spreads, right? I think in the commercial mortgage-backed securities market, when we see data center, it's not that the asset class in itself we don't like. We just think that the levels in terms of spread that commiserates with some of the unknown risks associated with a property type that's newer and non-traditional to us, we just don't feel like we're being fairly compensated. There's the unknown factors. You can kind of go on and on in terms of going through a rabbit hole of trying to ask the questions, whether it's obsolescence or what's to happen if an asset actually goes into default. What do you actually own?
Yeah.
Other than to me a shell space with a lot of energy tied to the underlying property. But these are things that I myself can't really answer. And so at these levels, in terms of spreads, there are other traditional commercial property types that we can get our heads around and invest in.
We have less than a minute left, but when you talk about risks, I'm wondering if the risk introduced by DeepSeek is one of the things that you're thinking about, because the narrative that has emerged is that maybe actually we don't need as many of these data centers, and we've seen definitely a big bill out.
Yeah, that is a risk that came out of nowhere. I wasn't thinking about it. Again, I'm not an AI sort of expert in terms of this space.
I wasn't either.
So these are things that, as we look at the levels where some of these deals are trading relative to some of the risks that we don't fully comprehend. To me, if these bonds were to reprice in a meaningful manner, then it's probably warrants us to review our sort of reason for being on the sidelines, right? But I think right now, just given that a data center deal can trade similarly to a brand new office building per se, with traditional long-term leases on a reset value. I can understand the office building. I don't fully grasp data center. And so as a function of that, in terms of the risk associated with it, there should be additional risk premium associated with some of these bonds. Right?
Fascinating stuff. All right, yeah. Morris, we are very looking forward to the next time that you come on. Katie, thank you so much. That is Bloomberg Open Interest co-anchor Katie Greifeld and Morris Chen from DoubleLine.